Good morning, everybody. Mike Vacchi, Princetontrader.com here with your Wednesday market webcast. Okay, so yesterday we talked about secondary band rides. Let me zoom this sucker in one. Boom. Kind of ride the band. You can see the big consolidation, okay? So we come down, we just kind of grind, let these bands get a little tighter. They're tight on a relative basis. I mean, they never really got all that tight. I mean, you're talking about Bollinger bandwidth of 5 to 6.5, but relative to where we were here, which is like 45, like just for kicks, yeah, it was like 46. So, relatively speaking, the bands were tight after a long period of consolidation. What I'm going to be interested to see is to what extent now the bands can expand with this secondary band ride. So what's a secondary band ride? We ride the upper band. We take a day off on Friday, take it down 29.03, deal with that 100-day, deal with a 9-day, kind of suck them in, get them looking over the edge, and then boom, you hit them during the holiday session, you make higher high, you engage the band. Last night, they brought it back in. They brought it down off the open yesterday, down to volume weighted average price at 3,006, which was a nice little short for us. And then we caught a nice little short at the end of the day on the move down. The rest of the day was really just kind of choppy. It didn't do anything at all. It didn't go anywhere. It didn't do anything. The regular session was pretty choppy. Last night, they go down. They deal with 84. They can't hold 88, which was important last night for the Bears. We were actually short against that area. We ended up taking a -3, almost a -4. And we flipped down against 88 in the low 90s, took some profits, went to bed, and it just kept on going. These Globex sessions just keep on going. I woke up to 34. So we punched out of the rest of that this morning. The function on the chart is it comes up, hits this upper band again, makes a higher high relative to the prior day, and you got yourselves a good old-fashioned secondary band ride. Secondary band rides tend to be, historically, FOMO on steroids, okay? So it's like, okay, well, we rode the band. We've had this run. Friday takes a day off, okay. So it's going to pull in. So I'm going to get something, I'm going to be able to reload, those positions I wanted to do and I didn't do, and, maybe, this time I'll buy it. I swear I'll buy it. Wake up, come back into the office Tuesday morning after the holiday, boom, you're up. Now you're up again. So the FOMO, if the secondary band ride plays out like most of them do, the FOMO tends to take over. And that FOMO is a quick trip to 3,100. There's more than enough fuel built up in this consolidation for these bands to expand and do another, 60 handles from here. That's just, 60, 70 handles is not a big deal. What do the Bears have to do? You have to be relevant. You were barely relevant yesterday. This has to be a two-sided tape. And if the only time you can make the market move is when you get a China headline, you're going to be in trouble. Because that's all they could do yesterday. They had the one China headline where they started throwing rocks about the tariffs late in the day, and that spurned the move down. But that's not going to last. So remember, in a vacuum, this thing wants to go higher. They always do. You have to understand that as your baseline existence. In a vacuum, the market wants to go higher. If there are things that are going to hold it down, kind of like February, March, April, fine. Not even April. Shit, they started bouncing it in late March. You got to understand that right now, unless the Bears get a favorable headline, they're either holding serve at key areas or they're walking this thing to the upside. So as far as numbers today off the open, volume weighted average price is down at 3015. Proprietary moving average is at 27. 5-minute mids at 28 and change. It's kind of flagging back from 34.35. I'm not messing with it until 9:30. We did our business last night. I'm not a big fan of trading pre-market. It's, you know, the way I describe it to people in the room is it's an inside joke that we don't have the punchline to. You know, I don't know if the intention into the bell is to walk it up, take it down, go both ways. I would rather wait for the bell to ring and deal with it then. So if VWAP holds on the open and you get a new Globex high this morning in the morning window, there is an opportunity for the market to really walk up today. What the bears are going to have to do is they're going to have to survive the morning turn. They're going to have to break the regular session low. And if they can do that, then they can head back towards round number 3,000 and try to salvage some kind of, of relevancy by taking out 3,000 and holding it. Now the hourly chart, you got your hourly mid-band at 3,008, okay? So VWAP at 16, hourly mids at 3,008, round number 3,000, daily pivot 98. These are all areas that the bears need to deal with, that they need to convert and hold on a multi-day basis if they're going to be relevant for more than just a quick trade, okay? You can see that was China. That was China news, okay? They're throwing rocks, we're throwing rocks. But that's not going to last. So they dip it down here. This was the 83 quarter I was talking about. When they couldn't take out 88, you had to flip and go, and it was a pretty painless trade, actually, once they got it rolling. They tested the hourly mid-band off the Europe Open. They printed 04, and that was all they had. So this little flag back into the hourly mid-band was probably the most bullish thing that happened all night long. And now we're back up above the upper band. We traded as high as 35. So let's see how it goes today. Everybody have a great day. Be safe. Be healthy. Trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.